It's the channel for learning about trading and investing. Welcome to daily stock market analysis show, where we look at what happened in the market during the day and how we can plan for the next trading day. And this is for May 12th, Thursday, 2022. So we had the banks performing today, but highly volatile day. But the main index Nifty 50 could not do well. Right? Let's see what exactly happened. Right? So as usual, the pre-market analysis for May 12th, Thursday, tomorrow expiry day, would be based on all these parameters like we do every day, and we'll also have some actionables, and we'll wrap up the market view as well, right? So this is the Nifty 50 and Banknifty charts that you're seeing on the daily time frames. You can see that there is good support downside, right? The buyers are there. That's what the wick indicates, and the candle that's formed is almost near to a hammer, not exactly a hammer because there's a wick on the top also, which hammer does not normally have. Remember, there is a big resistance of the gap that is there on the top. And Banknifty, what has happened is Dragonfly. Dragonfly is a doji candle, that is a small body. There is indecision element is there, but the wick size indicates there is very good support from the bulls on the downside, right? So normally Dragonfly could turn out to be a trend reversal. If you assume that the trend right now is downside, and then this Dragonfly could indicate there is a potential up more that is possible. Overall, you can see that Banknifty did well and Nifty could not sustain, but fall down, breached the 16,000 and then climbed up from there. V-shape, W-shape moved, multiple V-shape move is what happened exactly, right? Let's get into the specifics. Like it's also 0.5% down, 73 points only lost, but Banknifty gained 250 and closed green, right? Nifty could not do that. Overall, we know the price action is head and short of double top pattern breakdown for the necklines that is happening, and the price has fallen back after a failed breakout into the channel from where breakout happened, right? Same story with the The candlesticks we have seen, candle patterns, the Dragonfly, doji, indecisiveness and trend reversal potential is there. Hammer also, trend reversal potential is there, but it's not exactly a full-fledged hammer as such, right? But the wick size of both the candles indicates there is good support downside from where it bounced today, right? Intraday is like 0.5% up more. It is a gap up that happened both the indices, and it's 0.25 and 1.5% of gap up, nearly 0.5% and 0.24% of gap up that happened, but could not sustain and then fall down 1.5% down, almost, and then did a W and record most of it on the Banknifty and some of it on the Nifty. That's exactly what happened. So this is the price action, right? You can see that the price action is showing that it gapped up from here and then fall down big and then recovered, like most of it. We can say Banknifty recovered most of it and some more, 20 points gained, right? This is another view where you can see that it's it's a channel here on the Nifty, head and shoulder breakdown, neckline breach, and then fall down. All supports are gone, and then now it is trying to bounce up from this 16,000 kind of support zone, 15,900 to 950 kind of. Basically 16,000 was breach, but it's trying to recover with a hammer pattern. Same way, 34,000 seems to be a good support, and it is earlier. It also has a head and shoulder breakdown and a double top pattern here, and so there is a possibility that it can breach the support tomorrow and then go to the swing low and then make a new swing low, or stop here, retest it, and then bounce it from here. All these possibilities are there. So 34,000 is crucial to hold, and 15,950 levels is also crucial to hold, and 15,650 is the level of the previous swing low is there. Similarly, 30,000 nearby is where the previous swing low is there. So all these levels are very crucial. So anything can happen right now, right? So there is indecisiveness that is evident in the overall picture. Japan's clearly shows bearishness and high volatility because of the distance from the median and the price, and then there is a gap. It's walking on the bands on the downside, right? Clear bearishness evident by the expansion of Bollinger Bands from downside on the short term on Nifty and the Banknifty. Support resistance level, if you look at right now, the supports can be seen near to 58, 59, 50 levels, 5961. Below that 15,500, 15,650, and then comes to 15. The new lows that may end up from there further down. We look at that at that time. But basically, this 16,200 can be seen as a support, but it's it's not close. That 200 is not just close below that, so it's not a support really. It's a resistance more. but it could act as previous supports. It could act as support if it is falling further up. 16350, 450 is a Fibonacci 50 retracement level. Above that we have a gap resistance 16550 and 16650 and 16700, 16750 above that. Then 16800, 16900, Fibonacci 38, and then 70,000 rounding number. Then 7200, 350, 500. That's how it goes on the upside till the Fibonacci 23 retracement levels. That's on the Nifty. Banknifty similarly, I can't properly see the levels on this time frame, so I'm going directly to the Banknifty charts and then seeing the levels, right? So what do you see here? Let me just clear it off. So what you see here is that there is a gap that was there, very long previous gap from the March 10th, that was breached for yesterday. Now we have the first support that you can see at 33,600, 34,000. So 34,000 levels for matching 61 retracement level. That's we have to keep a close watch. Banknifty is breaching that order above. Because if that reaches then 32,400 to 32,800, then 31,800 to 32,000, that is what the previous swing low is there. So the levels to keep watch of the downside. So resistance above 34,350, 34,750, and then 35,000 levels if match 50, and 35,600 to 35,900, then 36,300 to 36,800 for match 38, and above that we have a gap at 37,000 starting, and then 37,500 level to Fibonacci 23 retracement ending. So above that only, so those are the close by resistances on Banknifty. Let's get back in strides. And yes, momentum, you can see it's bearishness on the short term, but the medium term is holding on. That's the weekly charts. Both indices are holding on the sideways still, but short term it's bearishness, and it is falling in the case of Nifty and rising in the case of rising momentum in the case of means bearishness weak, turned weak on Banknifty, but bearishness is turned strength here, has strengthened on the Nifty side. So trend, if you see, it's like bearishness on the short term and the medium term, both the indices, right? And it is a rising strength, rising strength. So bearishness, it's heavy. Trend is clearly bearish. That's for evident. Momentum, short term, it is clearly bearish. Volatility has spiked one little more again, 2.2, so it's 22.8. It's very close to 23 level, so we are heading towards 25. So implied volatility on the Nifty is 22.25. Implied volatility percentage is also the peak for the 52 week level. If you consider it is 88%, and about 22 is you have to be extremely cautious, stay out of the trade if you are not a professional trader. Open interest analysis, you can see that there is a lot of call buildup that has happened on Nifty, and put buildup has happened on the Nifty. That clearly indicates it's contradictory moves are happening. Nifty is short buildup, and then Nifty is long buildup. Can be seen in the futures operators also. Put call ratio is also contra. 0.5 is very close to bearishness, by 0.85 on the Bank Nifty is clear closer to bullishness. So that's why the tagline or the thumbnail message itself is showing whether the banks can support the Nifty. Normally it's to bring up Nifty up back again is what we have to look at for the next day. So the range is 15,500 to 16,500 points range for tomorrow, just a day before the expiry, and that's where the highest put and call rating is 16,000, 16 and 17,000 for the second level of support and resistance are seen. Bank Nifty 34,500 and 35,000 because the highest put and call rating is seen, where support resistance can be assumed. 34,000 and 36,000 where the put rating and the second level of put rating and the call rating is seen. Right? So PCR is in favor of Bank Nifty is bullishness. PCR is showing bearishness on Bank Nifty. Right? So it's all depends on how the banks are going to do next day. Look at the heat maps. Only banks, HDFC banks are doing. Twin size easy bank is done. Kodak bank is done. Axis bank is done. So all the banks are done, and that kept the Nifty from falling too badly today, right? So overall, if you see financial services did not do completely well. It can be seen in FMCG, construction, metals, energy, and all that. But auto did not do well. That was doing well till yesterday. I mean, somewhat okay. That was the only sector that was holding on sideways, but that also broke down today. So that's a heat map in the sector we'll watch. Index heavy, it's HDFC is green. Both twins are green. They're climbing the sideways zone. Such as Rome, but HDFC Bank is in a side. Is in a major support zone and it's trying to consolidate there and try and climb up. While HDFC is also trying to climb up back to the resistance zone from where it fallen down. So you'll have to keep a close watch. It's at consolidation bottom. Now at the bottom level kind of feel is what we get. Lines, following the results earnings, it has fallen into the short term bearish all of a sudden with the big correction which has negated all the up moves and all the gains that it had made since last several weeks, right? So clear short-term momentum. So I will have to keep watch when does the climb back lose momentum in the sideways momentum at least, right? That is what you have to please watch. Infosys is an IT stock. IT stocks are heavily corrected today, also down day. Remember, there is a big gap resistance. It's on the upside, and it is not managed to get into the sideways on from the bearish zones on the momentum and still remains there. Interestingly, TCS also had a red close, but interestingly, it's on the edge and it is a very good support zone, and it is also trying to catch up on the momentum side, but looks like it may consolidate this and it may not fall below the 3,300 kind of levels, right? So TCS, although moving down, it's more at a very good support level. Well, Infosys, you never know what happens because it's clearly unable to climb up, and it may not be able to do it very soon unless this major gap resistance and upside is taken. ICICI Bank showing red again, remains in the bearish zones in the short term, and it had given given up that resist support zone, and then I was attempting to climb back, but did not succeed today. But Kodak is performing, and it is showing greenery, and then remember that the support zone where Kodak is a very good support. Probably Kodak has been consolidating since a very long time with this support of this particular zone, and it may continue to do the same, right? There is a green candle, uh, but whether this resistance zone where it has been testing at least 5-6 times now will be taken out and then it will move further ahead is what you have to close watch. But as of now, sideways momentum is maintained by very few banking stocks, and even ICICI could not do that, but Kodak Bank is doing that. So overall, you can see that the bearishness is evident everywhere. Banks are trying to consolidate and then maintain the sideways zone from the slipped into bearish levels earlier. Right? So that is what is happening. Otherwise, other heavyweights are not doing great. Two of the ITs and Reliance are not giving much hope as of now. Sector-wise, industrial sector-wise performance, if you see, it is down by 1.2%. IT again down, metal down. Metal was flat, kind of. Auto also down, which is holding up sideways till yesterday. Pharma is again slightly down. FMCG nearly 0.7% down. Realty 0.7% down. Realty was doing up, doing good, 0.7% up today. But overall, all of them except FMCG is in the short term bearish. So stay out of the sectoral approach of picking the stocks from the highest performing because none of them is performing. Right? Some hope is there only in the FMCG, which is remaining short term sideways. Institutional performance, you see you see the selling that is happening. 4,000 crores, 3,000 crores, 500 crores, 5,500 crores. That's kind of selling that is happening from the FI side, and players have been continuously buying, but it never matches up to what the FI is selling. That is exactly what is happening, right? Now today's data is not available. Let me just refresh and see whether the data has come in or not. It has still not come, so let's move ahead. And most likely it might have been big. The same thing might have happened. Right? FIs might have sold, and equally, big amount of buying might have happened from the domestic institutional side. So institutional selling is a worry, continue to be a worry, especially from the foreign institutional side. And domestic institutions, how long will they do that? It's a question. Now currencies, if you see, it's at all-time near all-time high today. Is also 27.25 is very bad. Rupee is weakened to the core. Look at dollar index; it's at 20-year high plus and then consolidating around that zone, right? So dollar is strengthening, rupee is weakened to the core. Top indices is where the real worry is. The US markets are crashing, and then major support zone is breached on all the indices. Dow Jones, what you can see, is just trying to take the next support and even breach that, but manage to climb back above that. Momentum was clear in the bearish zones, trend is in the bearish zones. S&P 500 also same story. Just given the major support zone now. You never know when it is close. Going to take the next support. And but it was a green close that happened yesterday on Nasdaq as well as S&P 500. But Nasdaq also had given up the major support zone. So the support is breached. Lower low is being made by all the US market indices. Momentum is clearly in the short-term bearishness, right? And whether it ends up here or does it crash further declines into much deeper levels is what you have to closely watch. If that's happening, then we have no other way but to correct ourselves, right? Big selling will reflect in our markets also, right? Taking our indexes further down below the 15,500 kind of levels. Crude oil in another climb back above 102.7 levels and sideways momentum is consolidating since several weeks after making the 13-year high, but above 100 it's high, crude and not good for economy. Gold has given up the major support from where it tried to break out 2 times and fallen, and now it looks like it's taking a medium 1830 kind of support level, and then today was a green day where gold has gained, but remember that the momentum has breached the sideways zones and got into the bearish zones. No? So overall sideways momentum and bearish move is what the currency, bearish momentum and bearish move price action is what the gold has been showing since several weeks, and all the today was a green day for the gold. Actionables: Lupin short sell and Whirlpool of India short sell. Lupin is showing a trendline channel downward, clear bearishness on the momentum indicator RSI, and trend rising up ADX indicator on the trend. So trend, momentum, price action all bearish, and it could give good swing till the next 537 kind of levels. No, the channel could go zigzag up and move, and swing trends can come in. Whirlpool of India is having a head and shoulder break. This both are weekly charts, so entry has been made on a monthly, on a lower time frame of the daily charts, right? So this is head and shoulder on the weekly, shoulder and bearish momentum on the weekly also. Definitely daily charts also will show the momentum bearish. So this neckline can be kept as a reference, and if it bridges that, then definitely it can give good swing trades on the downside. Probably it's overvalued also, this 1564. So all the gains, no corrections can come in when the market turns bearish. So Whirlpool of India and Lupin Limited, two action numbers on the short side for swing trades basically. Okay. So wrap up, moderate bearishness again short term. So actually nothing was altered on this. Everything is exactly the same except that tomorrow is an expiry. Volatility, gamma effects and all that can come in. You have to play cautious. Otherwise it's, the trend is bearish, momentum is bearish. No, momentum is falling further. Bollinger Bands expanding further. Fyers are selling. US markets trouble. War is still there. RBI rate high. US inflation historic level. Rupee weekend. Dollar at historic high of 20-year. Fyers are aggressively selling every day, and there is every possibility that we can make a new swing low, which is heading to 15,650 below and 30,000 kind of levels, right? So those are so levels that you'd watch is 7,500, 37,500, and 18, 350, 39,400, and 5,900, and 3,200, and 15,650, and then 30,000 kind of levels, right? That's where we are heading to most likely. So already still the uncertainty has increased. We are on, so basically in just 1 month, there is a big 40% of spike in the India VIX has happened. That much of greed and fear is there in the market due to all the uncertainties of the inflation, of the war, of the crude oil, and all this is still there in the market. Is clearly evident for the VIX. So stay out of the trade if you are not a professional. Don't trade. Hedge your portions of long-term investments with gold or option strategies or similar methods, right? And if you hang on. And if you are an investor, you can buy in SIP mode at good quality stocks at lower rates, and in a SIP mode, SIP mode. And if you're a trader, intraday, very difficult to trade because V shapes and multiple W shapes, N shape, M shape, all that's coming. So it's very difficult to catch the trend. Scalping can work. Intraday scalping with 5 minutes, 10 minute scalping may work. Otherwise, nothing works, and it's very risky to carry forward the overnight positions because of the uncertainty that is there. You can wipe out the capital. So always have hedge strategies with predefined risks that you can afford to lose, and cut short your position size when the volatility is above 20. Right? That's all we can do. Risk management is all that's in our hands. Right? We can have a view but that view may or may not be respected. But all we can do is put stop loss and manage our risk and cut short our position size. Right? Basically. So that's my view. Moderate bearishness continues to be my view for the short term. So hope it helps you in some way to frame your own view and your own trade plan for the next day. If that helps you some way, consider hitting the like button. Subscribe if you are not subscribed. We have very few subscriptions and appreciate your help and support. Share it to maximum. Thanks so much for watching. Happy trading, happy learning. Bye.